Alpesh Patel is the CEO of Pryfinium Partners here in London. Alpesh, it's good to see you. It's been a long time, actually. There's been a strange new reality developing since I think the last time we spoke when it comes to interest rates. I guess the sooner that the Fed feels it can stop raising rates, the less likely it is that it's going to need to cut them in the future. Is this the sort of the new normal for interest rates?
Victoria, good to see you as well. And it's been way too long. But I'll tell you something else. With interest rates, I can't believe people are talking about cuts. Why would they cut it? Why would they even cut it next year unless we had an economic crisis or a recession? Now, a recession is, by the bond markets, being priced in the US. The NASDAQ is up 38% this year, 38% approximately this year. The massive wealth effect that has on Americans who are looking at their pensions, and they're more heavily invested in the stock market than the rest of the world, looking at that thinking, it's fine. They're looking at, we've got a pause. We've been told there's only going to be 2 more rises, and then there's talk of cuts next year. This doesn't stop or slow down inflation. This fuels it. And on top of that, I looked at the 500 largest listed American companies. 468 of them make profits. Do you think they're not going to spend those profits and invest and compete? Of course they are. We don't have enough loss-making companies. We don't have enough unemployment in the US, and we're not going to get it anytime soon. So whatever the Fed's doing, as they themselves recognized, it's having next to no impact.
Okay. But central bankers here have raised rates, to be fair to them, at the fastest pace since the 1980s. So why is it that it's not working? Why is it not restrictive?
You know the old saying, to a man with a hammer, everything looks like a nail. And what policy have they got? They've got interest rates. Well, we know the Bank of England has admitted it's failed at its job at forecasting. It's not good at it. And now they're doing an external investigation into why they're not good at the job they're supposed to be doing. One job. They're not good at it. It's a tool which hasn't worked, doesn't work. It hasn't worked. Look, at university, they used to teach us about the Phillips curve. That nobody talks about that anymore, inflation and unemployment, because these things don't work anymore. The economic mechanisms in a global open economy don't work the way they used to. You can't control these things from just one central bank with one tool. It needs far more coordination. It needs far more regional taxes, for instance. We should have 50% VAT in Mayfair. There's no point in having, for instance, in London, a wealthy part of London, no point in having blanket rates and punishing those parts of an economy which don't actually have any money anywhere and don't impact inflation, and then letting those which have a lot of money, like some of the big corporates, just get away with the same interest rates, the same corporation tax rates, for instance, my company pays. So it's just ineffective. Monetary policy is ineffective.
Okay, but it's not as though they have just one tool. I hear what you're saying about, whether or not they increase or reduce rates, but various different central banks around the world have tried different things. There's been quantitative easing, for example, here in the UK. We've got the ECB with their own monetary policy tool as well that they're trying to do. They have tried other things. Why does the Phillips curve, you brought it up, why does it not apply these days?
I got really good mark at university actually on an essay about that, so I brought it up. Several reasons these things no longer work the way they do. And by the way,
okay, first off, you know what we should probably do? We should probably explain it to people. Explain what the Phillips curve is. If you got that top mark.
In simple terms, the idea is if you raise interest rates, you're going to cause unemployment. If you cause unemployment, people have got less money. They're going to spend less, and that will bring down inflation.
10 out of 10.
Makes sense. Makes sense. Doesn't work anymore. One of the key reasons, you only need to look at the data to see that it doesn't work, because we know wage growth pressures are there. We know the employment market is tight despite higher inflation, despite higher wage growth, despite higher interest rates. Now, so what are the answers? Well, we probably need to do a bit more on fiscal or taxation policy. Can you imagine politicians wanting to do that? They're unpopular enough as it is. In other words, our fiscal policy isn't helping monetary policy. And so all you're left with is higher interest rates, which so many people have fixed rate mortgages, for instance. So the way it used to work doesn't impact so many of them anymore. And the ones it impacts through cost of living crisis, well, they had so little money to begin with, they weren't economically impacting the economy to start with. So what I'm saying is you're probably going to need higher taxation Do you want that? I don't want that. I don't want to inflict that on people. And you've got this, and the market knows this. The market knows it's not working, which is why, as I said, the Nasdaq's up 33, 38% so far this year. My pension's up about 40%. Can you imagine? Do you think that's going to stop somebody who might be approaching pension age or see those savings? You think they're going to think, yeah, I better ease back on those holidays and spending in those restaurants? They're looking well beyond interest rate hikes, and they're not being impacted enough. I'm not saying I'd want to do it as a politician, but we need heavier taxes if you want to bring down inflation. And I'd suggest we don't necessarily want to bring it down as much as the Fed's target rate and the ECB's target rate and the UK target rate of 2%, because you're going to smash the economy, you're going to destroy jobs, and I don't think you really want to do that.
Okay, Alpesh, we're going to have to leave it there, unfortunately, because I've got the rest of the programme to do. But thank you very much for joining us. But we are, however, going to stay with that subject, but move across from the